looking at your screen hoping this trade will finally work out. You've been doing this for 2 years now, maybe longer. You've read the books, taken the courses, watched hundreds of YouTube videos. You know what a head and shoulders pattern looks up. You can spot support and resistance. You understand risk management, at least in theory. But here's the brutal truth nobody wants to say out loud. You're still losing money. Or maybe you're breaking even, which feels almost worse because you're so close yet so far. The market keeps humbling you just when you think you've figured it out. And the question that haunts you at 3 in the morning when you're replaying that losing trade in your mind is this: why is this still so hard? What am I missing? Because if 2 years of dedication and study haven't made you consistently profitable, something fundamental is wrong. And I'm going to tell you exactly what that is. Here's what's actually happening. And it's going to sting a bit. You're not failing because you lack knowledge. After 2 years, you probably know more about trading than 90% of people who casually throw money at stocks. You're failing because you're trapped in a cycle that almost nobody talks about. A cycle that keeps you perpetually stuck between beginner and professional. Let me paint you a picture of what this looks like. You learn a new strategy. Maybe it's a moving average crossover or a breakout system. You backtest it or paper trade it, and it looks promising. You get excited. This is finally the edge you've been searching for. You start trading it with real money, and for the first few trades, it might even work. Then comes the inevitable losing streak. 3 losses in a row, maybe 4. Suddenly, doubt creeps in. Is the strategy broken? Did the market change? Are you executing it wrong? So you start tweaking it. You add an extra indicator, maybe change the time frame. Adjust your entry rules. And here's where it gets insidious. Sometimes these adjustments work for a few trades, which convinces you that you're on the right track. But then more losses come, and you tweak again. Before you know it, you're not trading the original strategy anymore. You're trading some Frankenstein version that barely resembles what you started with. And when that doesn't work, you abandon it entirely and search for the next holy grail. This is the cycle. Learn, test, trade, doubt, modify, abandon, repeat. You're not building expertise. You're collecting strategies like someone collecting stamps, never actually mastering any single one. The trading industry doesn't help either. In fact, it profits from keeping you in this cycle. Think about it. Every guru, every course creator, every indicator seller benefits from you believing that the answer is just one more piece of information away. They show you their winning trades, their percentage gains, their lifestyle. What they don't show you are the years of losses they endured, the strategies that failed, the psychological breakdowns. They present trading as a knowledge problem, when it's actually a psychology and execution problem. You're drowning in information, but starving for wisdom. You know what a dozen different candlestick patterns mean, but you don't know yourself. You don't know how you'll react when you're down 3% on a position that was supposed to be a sure thing. You don't know that you'll hold losers too long, because admitting defeat feels like admitting you're not cut out for this. You don't know that you'll cut winners short, because the fear of watching profits disappear is more painful than the regret of missing out on bigger gains. Let's talk about what actually separates struggling traders from consistently profitable ones. Because it's not what you think. The profitable trader doesn't have better indicators or secret patterns. They're not smarter or better educated. The difference is ruthlessly simple. They've learned to do boring things consistently while you're still chasing excitement. Profitable trading is the most boring thing in the world when you're doing it right. It's following the same process every single day, regardless of whether you feel like it. It's taking the setup that meets your criteria even when you're scared. It's not taking the setup that looks tempting but doesn't meet your criteria even when you're bored. It's cutting losses at your predetermined level, even when the price is just sitting there, and you convince yourself it'll bounce back. It's taking profits at your target even when momentum suggests it could run further. This consistency sounds simple, but it requires something most traders never develop: a completely unemotional relationship with money. You say you understand risk management, but do you really? Risk management isn't knowing you should risk 1% per trade. That's just information. Real risk management is being able to watch that 1% evaporate on a losing trade and feel absolutely nothing. No anger, no frustration, no urge to make it back on the next trade. It's treating that loss with the same emotional weight as paying for a coffee. Can you honestly say you're there? Or does each loss still sting? Does it still affect your mood, your confidence, your decision-making on the next trade? If you're being honest, losses still hurt. And that hurt is killing your account more surely than any bad strategy ever could. Because when losses hurt, you start doing irrational things to avoid pain. You move your stop loss further away. You hold positions overnight hoping they'll recover. You size up trying to make back what you lost faster. You revenge trade. Every single one of these behaviors comes from one root cause: you're trading with money that matters to you emotionally. Here's an uncomfortable truth that might explain why you're still struggling. You're probably trading with an account that's too large relative to your financial situation. Not too large in absolute terms. Maybe it's only a few $1,000s. But too large emotionally. If that account went to zero tomorrow, it would genuinely upset you. Maybe it would hurt your plans, delay your goals, make you feel like a failure. That emotional weight turns every trade into a high-stakes decision, and high-stakes decisions trigger all your worst instincts. Fear makes you hesitate when you should enter. Greed makes you hold when you should exit. Hope makes you average down on losers. This is why professionals often tell beginners to trade with money they can afford to lose, but nobody really internalizes what that means. It doesn't mean money that won't bankrupt you. It means money that you genuinely don't care about. Money whose loss would create zero emotional response. For most people, that's a much smaller number than they want to admit. Let's address another reason you're still struggling. You're trying to trade like a full-time professional while living a full-time normal life. You have a job, family obligations, social commitments. You can't watch charts all day. You can't respond instantly to market moves. But you're trying to trade strategies that require constant attention and quick decision-making. You're day trading, or scalping, or swing trading volatile stocks. And you're doing it around your lunch break or after work when you're mentally exhausted. This is like trying to compete in a marathon while everyone else gets to run and you have to hop on one foot. The game is hard enough when you're playing it full-time with full focus. It's nearly impossible when you're playing it part-time with divided attention. But you keep trying because the idea of being a successful trader is intoxicating. The freedom, the income potential, the intellectual challenge. So you keep bashing your head against a wall that isn't going to move, wondering why you're getting headaches. Here's what nobody tells you about those 2 years you've invested. They're not wasted, but they're also not taking you where you think they are. You've been practicing, yes, but you've been practicing inconsistently with constantly changing methods, which means you haven't actually developed any real expertise. Expertise comes from repetition of the same actions until they become automatic. A professional basketball player doesn't practice a different shooting technique every month. They practice the same shot thousands of times until they can do it in their sleep, under pressure, when tired, when the game is on the line. You've been trading for 2 years, but how many times have you executed your current strategy? If you're honest, probably not that many times, because you keep changing strategies. You're not 2 years into mastering trading. You're 2 months into 24 different approaches to trading. The pattern recognition that makes great traders isn't about recognizing chart patterns. It's about recognizing patterns in yourself. When do you trade best? When do you make your worst decisions? What emotional state leads to discipline? What emotional state leads to chaos? After 2 years, you should know these things about yourself intimately. But most traders never even think to ask these questions. They're so focused on the external game, the charts and the news and the indicators, that they completely ignore the internal game. But trading is 90% internal game. The chart is going to do what it's going to do regardless of what you want or hope or believe. The only thing you control is yourself, your decisions, your reactions, your discipline. And if you haven't spent these 2 years studying yourself as intensely as you've studied the markets, you've been studying the wrong subject. Let's talk about something that might be the core issue. You probably don't have a genuine edge, and you definitely don't know if you do. An edge in trading isn't just a strategy that sometimes works. It's a statistical advantage that plays out over dozens or hundreds of trades. It means that when you execute your strategy with perfect discipline, you win more than you lose, or your winners are bigger than your losers, by enough to overcome fees and slippage. Do you actually know if your current approach has an edge? Have you tracked enough trades with consistent execution to know your win rate and average win versus average loss? Most traders can't answer this question because they've never traded anything consistently enough to gather meaningful data. They're flying blind, making it up as they go, and wondering why they're not getting anywhere. It's like trying to run a business without ever looking at your profit and loss statement. You're just guessing about whether you're making or losing money and why. Here's a brutal exercise. Go through your trading history for the past 6 months. Actually open the statements and look at every single trade. Now answer this. If you had to explain to an outside observer why you took each trade, could you? Would your reasons be consistent? Would they follow a clear set of rules? Or would you find yourself saying things like, I thought it looked good, or I had a feeling, or I saw someone mention it? If you're being honest, you'll probably find that your trading decisions are far more random and emotional than you realized. You're not executing a strategy. You're making it up trade by trade based on how you feel in the moment. This isn't trading. It's gambling with extra steps. The comparison to gambling is worth exploring because it reveals something important. Casinos make consistent money not because they win every hand, but because they have a statistical edge that plays out over thousands of hands. They don't care if someone wins big tonight because they know over time the math works in their favor. They're not emotional about individual outcomes. They trust their edge and let it play out. You need to think like the casino, not the gambler. The gambler is reactive, emotional, always chasing, always hoping this hand will be different. The casino is mechanical, unemotional, patient, trusting that the statistics will work out. After 2 years, are you thinking like a casino or a gambler? Do you even have an edge to trust? Let's address the elephant in the room. Maybe you're trading the wrong markets or the wrong time frames for your personality and situation. If you're an anxious person who obsesses over decisions, day trading is going to torture you. If you're impatient and need quick feedback, position trading will drive you crazy. If you have a full-time job, you can't trade anything that requires active management during market hours. This seems obvious, but traders constantly try to force themselves into styles that don't fit their life or psychology. They do it because that's what their favorite trader does, or because that's what seems most profitable or exciting. But there's no point in having a theoretically perfect strategy if your personality and situation make it impossible for you to execute consistently. Here's what the next 2 years could look like if you actually want to become consistently profitable. First, stop learning new strategies. Just stop. Pick one approach that fits your schedule and personality and commit to it for at least 6 months without modification. It doesn't have to be perfect. It just has to be clearly defined with specific rules for entry, exit, and risk management. Write these rules down. Every single trade for the next 6 months must follow these rules exactly. No exceptions, no discretion, no gut feelings. You're testing the strategy. which means you need clean data from consistent execution. Track everything: date, entry price, exit price, reason for trade, how you felt going into it, how you felt during it, outcome. This trading journal is more important than the trades themselves because it's how you'll actually learn. Second, cut your position size in half, maybe more. Make each trade matter so little financially that you can execute your strategy without fear or greed interfering. Yes, this means your gains will be smaller too. That's the point. You're not trying to get rich right now. You're trying to develop consistency and understand if your approach actually has an edge. You can always size up later once you've proven you can execute with discipline. Most traders do the opposite. They trade too large while they're still learning, which prevents them from learning because the emotional interference is too high. Third, accept that you're going to have losing streaks and that they don't mean anything about you or your strategy. This is just math. If you have a 60% win rate, which is actually pretty good, you're still going to lose 4 out of 10 trades. Sometimes those losses will cluster. You could easily lose 5, 6, 7 trades in a row, even with a legitimate edge. This is normal statistical variance, not a sign that your strategy is broken or that you're a failure. But you won't be able to accept this emotionally unless your position sizes are small enough that the losses don't hurt. Fourth, stop consuming trading content. Seriously, just stop. No more YouTube videos, no more Twitter follows, no more trading discords or forums. All of that noise is preventing you from developing your own voice and trust in your own process. Every new piece of information creates doubt and temptation to change what you're doing. You need quiet focus, not more input. Give yourself permission to ignore everything happening in the trading world except your own clearly defined strategy. Fifth, understand that consistency is the only thing that matters right now. Profitable traders aren't profitable because they never lose. They're profitable because they execute their edge consistently enough for the statistics to work out. Your job isn't to win every trade or even most trades. Your job is to follow your rules every single time, regardless of outcome. If you can do that for 6 months, you'll have real data about whether your approach works. If it doesn't work, fine, you'll know for sure and can adjust with actual information instead of guessing. If it does work, but you couldn't follow your rules consistently, you'll know the problem isn't the strategy. It's you. And you can work on the discipline piece specifically. The hard truth is that most people who've been struggling with trading for 2 years will keep struggling for 2 more years and 2 more after that. Not because they can't learn, but because they're not willing to do the boring, unglamorous work of developing consistency and self-awareness. They want the shortcut, the secret, the indicator that will make it all click. They want to skip the part where you trade small and boring while you develop discipline. They want to skip the part where you do the same thing over and over until it becomes automatic. They want to skip the emotional work of becoming someone who can watch money appear and disappear without flinching. But there is no shortcut. The only way out is through, and through means consistent execution of a clearly defined approach with position sizes small enough that your emotions don't interfere. If trading still feels hard after 2 years, it's because you've been working on the wrong things. You've been collecting information when you need to be building habits. You've been searching for the perfect strategy when you need to be perfecting your execution of a good enough strategy. You've been focused on the market when you need to be focused on yourself. The market doesn't care about you. It's not conspiring against you, and it's not rewarding or punishing you. It's just moving based on billions of dollars of supply and demand from millions of participants. You're trying to extract a tiny bit of that flow consistently over time. That's all trading is, and the only way to do it successfully is to remove yourself emotionally from the outcome of individual trades and trust that your edge will play out over time if you execute consistently. Everything else is noise and distraction, keeping you from the simple, boring work that actually produces results.